One of the most popular questions for people late in their career is simply, can I retire? And I just think that is the wrong question. It's the wrong framing. Now, as a little background, my name is Scott Caulfield. I'm a CPA and a CFA charter holder, and I'm the founder of Sophos Wealth Management. So the reason I just don't really like that question is I don't think it drives you at the right outcomes. Really trying to find out is, do you have enough assets to kind of support the spending rate and the retirement that you desire? And really, if I could boil down the retirement planning decision into one variable, my favorite by far is, what is a sustainable withdrawal rate? So how much can you take from your investment portfolio or all your investable assets? What can you withdraw each year that will, you have a high probability of never running out of money? And, it's my favorite for a few reasons. And first of all, we've got robust studies on it, and we can put some simple assumptions on the future to kind of figure out if the rate that you're asking for is really reasonable or sustainable. So the 4% withdrawal rate, that's kind of that's the safe withdrawal rate that was originally proposed and has been really robustly studied, and throughout history has not had any failures. So that's always a great starting point. And, from there you could say, well, what are my expectations for future inflation? What do I think, or what are currently real interest rates? Today, they're nice and positive, so you might project that a little higher. But then equities, at least in the US, are above average valuation levels. So maybe your future equity return expectations should be a bit lower. What do you expect inflation in the future? Currently, it's kind of above that 2% Fed target. So you might want a little bit of a lower withdrawal rate if you want to be extra safe. So that is kind of my favorite number to get at. There's also kind of some studies around and thoughts behind, all right, if you look at late in your career, let's say you're 64, 65, there's studies around like what would be a multiple of that income. Let's say you made $100,000 your last year of your career. And some studies would say if you're 64, 65, you might want somewhere between 8 to 12x that number in your investable retirement assets. Kind of outside of your home is the way these analyses are often done. But I just think that's a much better question, because if you're just simply thinking, well, can I retire? There are people that retire that have 8% withdrawal rates, 10% withdrawal rates, and they may be okay, especially if they don't have a really long life expectancy, if investment returns turn out great, if they don't run into a poor environment. But then the flip side, and this happens all the time, unfortunately, is people are a little too aggressive with their withdrawal rates, and they just have to adjust later in life. And that's just a regrettable circumstance, because it's much harder to go back to work. It's much harder to downgrade a lifestyle you're already used to. Very painful to have to sell a house, move, make some of these decisions that, may be suboptimal had you just done a little bit better planning up front. Because again, if you're just saying, can I retire? You can retire oftentimes with aggressive assumptions, or without really fully flushing out whether you've kind of come up with the right variables. So that's just kind of the way I like to think of it more. My favorite question would be more like, is this withdrawal rate acceptable? Or is my portfolio big enough? That's the kind of stuff I'd want to focus on. And then there's so many variables, obviously, within that. What's your expected spending? How do you think your lifestyle is going to change? Tons of that kind of stuff. So I encourage you to visit my website. Lots more information around that stuff. And please like this video and subscribe to my channel. Appreciate you tuning in.